Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how are you going? Thanks for joining us on the podcast today. We're recording on a Monday after the weekend and what has been some pretty interesting auction results around the nation, in particular Sydney, and that's going to be our focus today. It was an 88% clearance rate over the weekend, and interesting numbers when you consider what's been happening over the last sort of 6 or 12 months. And, what does it mean? Who knows? Any given weekend, it's going to pull up different results, but I think it's an indication that something's starting to happen in the city market and also across the nation in terms of auction clearance results. It's a bit above my pay grade to talk about it, so I'm going to bring someone to the studio today that's going to help me with that. But more so, I really want to drill down and do a bit of a special episode on maybe dispelling some of the uncertainty around apartments at the moment. You just only need to pick up a paper and see that it's crisis talks, whether it's the government intervention around the quality of the buildings that are going up through to all these buildings going to burn down at any given moment because of the cladding that's been put on it, all the way through to whether or not lenders are going to finance apartments moving forward. I think there's a lot of misconceptions in the market. I think there are some truths as well, but I really want to get into that today and cover that off. I'm going to focus on the Sydney market, and I've brought into the studio Adrian Wilson. He's from Air Real Estate. This guy focuses primarily on apartments, mainly within the Sydney area. Adrian, how you going, mate? You well?
Very well, Phil. Thanks for having me.
So is the apartment situation as bad as what you would believe if you read the paper or watch TV or talk to some bloke cooking some sausages who's an expert or a taxi driver?
Well, Australians love property, so absolutely, I think everyone's got an opinion on the matter. One thing's for sure, that what's transpired in the buildings you would have read about or seen about is not great news. And obviously, I feel very sorry for anyone that's caught into that situation. Having said that, the ABC released some stats last week that around 668,000 apartments have been built in the last 18 years. So if you look at it in terms of a percentage, it's almost minute. Having said that, not to dispel anything that with the people that are bought in those buildings, obviously those situations do need to be rectified, and developers need to ensure they're building quality properties. But overall, the apartment market, I think, is a phenomenal place to be in property.
And I completely agree with you, and that's what we talk about on the Smart Property Investment Show. It's always a good time to invest in property if you're investing in the right sort of property. Now, you, Adrian, I guess you're a real estate agent, which is a badge of honour. And you also sort of work within a property management space. So it's a whole list. You focus on resi, or you do commercial stuff as well?
Predominantly resi.
Okay, it's all residential property, so that's good. So this is the reason why I want to bring you in. And you've been in this game for a little while, but your business is relatively new, Air Real Estate. But you've chosen to focus on this apartment sector as part of the development of this company. Why is that? Why apartments?
Thanks, Phil. Well, I've been in the market for about 20 years, and most of that time was in Sydney city marketplace and the surrounding inner city fringe suburbs, and most of that was focusing on apartments. The agency that we've just created is really there to specialise in that space because we just didn't feel anyone was actually doing that well enough. There's a whole host of things around apartments which a lot of the traditional agencies tend to overlook in terms of strata, how they're managed, the intricacies of not only managing property and investments, but also how do you best market those properties. And so our agency really is structured in a way to help investors and sellers and buyers get the most out of that transaction.
Okay. And do you do off-plan stuff, or is it sort of, secondary sales?
Predominantly resale at this stage.
Yeah.
We obviously have a plan to get into that space, but we're only a couple of months young so far. So
work out. You can't do everything at once. So we talk about this a lot on the Smart Property Investment Show around the benefits, but also pitfalls of buying off the plan. So I'd like to cover that off with you at some point during this podcast, and also a little bit later on, tips on managing as a property investor an apartment. But the type of people buying apartments today and the stuff that you are sort of listing and selling, is it the big sort of skyscraper 200, 300, 400 apartments in one block, or is it more of your boutique type stuff, or is it everything?
It's a mixture of everything. And thinking about your question in terms of the off-plan purchasing of property, so we tend to play a huge role towards the end of that transaction. So we're often helping our clients either find tenants or on-sell those properties, or just in some cases even moving in. And I think there's still a huge amount of opportunity in that off-plan space for people who are looking to buy investments or to purchase a place to live in. But I think what will happen as a result of some of the news articles you mentioned earlier is that there'll be more price differentiation for quality builders, quality products. And so I think that will probably change, and that might give the market a bit more sense as to what are A-grade buildings and maybe what are C-grade buildings.
And I completely agree with you. And I think you will see that differential moving forward. And I think also you'll get a a perception change of the type of apartments people will buy. I think, there'll be a flight to sort of more boutique, lower density style dwellings rather than these big sort of, hundreds of, 20, 30 odd floors. But there's still going to be a product for that because, we have a growing population. We need population. And also the type of people who are coming to Australia or living in Australia, they're quite familiar living in those sort of scenarios. So I think you'll see an improvement of those sort of blocks. But just, real estate agents like talking about the value of properties. It's your bread and butter. When the stuff that you're seeing or you're doing a resale off the plan purchase or something which is just settling and someone's wanted to get out of it, maybe transition now before settlement, are the valuations stacking up? And we're talking Sydney specific here, but are you seeing the values stack up?
Well, talking about, as you said, Sydney City and the inner fringe suburbs of Sydney City, we're seeing values stack up. We're seeing that purchasers who are buying in these developments also tend to be fairly astute investors. They tend to be seasoned investors because your average price in tends to be a little bit higher than most. So because of that, certainly if there is a differentiation between valuation and price, most of the people purchasing in these buildings have the capacity to proceed. And that's always one of the risks, I think, with off-plan speculation. So buyers need to be wary of that. But I think certainly at this point in time, we're seeing the market, fairly solid.
And are you sort of getting anecdotal information back from vendors or whether it's purchasers of difficulties getting finance for these sort of assets around these apartments, whether it's, studios, one bedders, two bedders, is it hard to get debt on these things?
Look, finance has been harder of late, not just for the apartment sector, but for real estate in general or almost anything. But certainly that's easing now. And you would have seen that with some of your other guests talking about the easing of prudential regulations with APRA. Certainly interest rates are almost at all-time lows. So, now is actually quite a good time to be borrowing, provided that you meet the checklist. One of the things that I would say, just in terms of off-plan developments, and a lot of people do purchase with a view of buying for investment. And so what's important when the property settles is having a strategy around how to lease that as quickly as possible. And one of the things that we found is that it's the first run of rentals, the vendors or the landlords that actually take a slightly lower amount, which sounds counterintuitive, to get their place leased quickly, often end up benefiting in the long run. Because what happens is, let's say a building of 100 apartments settles, half of those might be investors. You've all of a sudden got 50 units on the market for lease at any one time and tenants are competing on price. If you can find the right tenant and get it leased quickly, although it's probably below your expectations, you actually then get to set the market first time around when that property comes back up for lease. And there's not 50 on the market, there might be one or two at most. So you then get to drive that next round of pricing. So that's one of the things we're recommending to investors at this point.
It's sort of about strategy. And if you've got 50 apartments all coming online at the same time, and let's be fair, most of them are identical. There might be slightly different configuration or, 2-3 bedrooms. Did you get a bit of angst within those sort of body corporates of people sort of setting a price point too low where the other people who haven't settled the exchange properly can't get their financing because what they thought the rent was going to be is going to be different than what it was?
Well, look,
fist fights in the corridor type of stuff?
Look, I haven't seen that, but that's a scenario that could play out. At the end of the day, though, I think you need to be mindful of your own asset. Our role as agents is to secure the value of assets in the building through the transactions that we deliver. And I think certainly for investors, it's important to get the right yield. I mean, if you look at, a property that might rent for $1,000 a week, if that's vacant for 2 weeks, you may as well have leased it for $950 a week because you've got the same net income. So one of the things that we're obviously very mindful of in that initial off-plan stage is to give the right advice, because a property that's vacant for 4 to 6 or even 8 weeks can be really detrimental to the overall return. And what happens in today's rental market obviously can be very different to what happens in 12 months. And you want to be first back on the market in that second run.
When we come back, I'm going to let Adrian give us his inside view and tips on how you actually find a good apartment asset in this current market. Welcome back, everyone. Smart Property Investment Show. How you going? I'm here with Adrian Wilson from Air Real Estate. We're chatting about the apartment market in Sydney, a bit of a special episode because of so much coverage around this right now. I want to get down to how you actually find a good asset in this current market, number one. Number two, is it a good market? And I imagine there's markets within markets as well as what Adrian's going to tell us. But let's go around the grounds quickly. From what I understand, Adrian looks after sort of CBD and the fringe areas. Do you go out sort of further than 5Ks, or is that the extent of it where you sort of look? Or
predominantly within 5Ks at this stage. stage, and
Okay.
we've got a plan to move into other apartment-based markets. But at this stage, we're mostly city-focused.
Okay, so let's do some specifics on some suburbs. So high density apartment suburbs, Barangaroo. That place is going up like you wouldn't believe. Some great restaurants down there now, and some good places to drink. And there's plenty of people obviously working down there right now. The casino's going up by the day. How do you find that market? What do you reckon? What's good down there?
Incredible market. And one of the things that we're really noticing as agents in this marketplace, and having been in the market there for almost 20 years, is there's been a significant shift over that time between the types of people that are wanting to be in this market. And so I can remember my first few sales and leases back in the early 2000s, and most of the people that owned these apartments were actually farmers or people who used to own industrial or warehouse type businesses that used to come into the city to trade, like physically trade. And so that's why
Like bolt holes in Sydney.
This is when before the ASX traded online, and you needed to come in and meet with someone to sell your wool, kind of thing. So what's happened is that a lot of the buildings that were built in the late 80s and 90s were predominantly studios and one bedrooms. Most of those buildings now are what I would class as investment grade stock. Most of the owners of those properties tend to lease them out, and they're predominantly based in the middle of the city. In the end of the 90s and early 2000s, there was a wave of more high-end buildings like Bennelong, the apartments on Kent Street Village, Quarry Apartments, those sort of buildings where all of a sudden they started to try and attract the owner-occupiers who were perhaps selling a large family home and wanting the convenience. But even still, most of those buildings had a much higher proportion of two-bedroom apartments or some ones. What's happened since then is that people have worked out how great the city is, and places like Barangaroo and Walsh Bay, King Street Wharf, Hyde Park, Chinatown and Haymarket, they're all going through this huge resurgence of lifestyle amenity, of restaurants, of cafes, of being able to offer people the opportunity to walk to work and hang out with friends and not have to get a taxi back to the suburbs. So what we're noticing is a huge demand of people that are now downsizing and wanting to come into this marketplace. And there's just not enough stock. So they're the properties which we're really seeing hotly contested, both for sale and for lease.
So there's no oversupply in the city market. There's a lack of stock in apartments in the city market.
Well, I wouldn't go that far.
Okay.
At the moment, if you look online, there's roughly about 400 odd apartments available for lease. Most of those are actually two bedrooms, 477 according to Domain this morning. And in terms of for sale, there's about 230 odd places for sale. The bulk of those tend to be 1 and 2 bedrooms.
Okay.
So
Is this the older stock, not the newer stock?
it's a mixture of
bag.
both, but what's really lacking in the market is high quality 3-bedroom stock for downsizers. And a lot of people are actually moving out of their family homes and wanting to rent in the market first before they make a commitment to purchase. So that's the most tightly held. To give you an idea, 210 two-bedroom apartments of those 477, so 44% of the market are 2 bedrooms. And that's an equal amount for sales, 106 for sales. Whereas if you look at 3 bedrooms, only 8%, 42 of those apartments for lease are 3 bedrooms, and only 14% for sale. So
we're talking about a pretty tight, we're probably talking maybe 2-3 square kilometres here of where all these apartments are based.
Well,
a little bit bigger. Like I'm talking
that.
like, Barangaroo, Walsh Bay.
Correct, taking from Walsh Bay to Haymarket. And in that market, you've got roughly about 7,500 properties. So it's quite a big area. And what's really interesting is that it's actually split up into a number of markets. There's not one marketplace, which a lot of people coming in very quickly work out. So it's firstly a series of markets, so Circular Quay, Walsh Bay, Barangaroo, Hyde Park, Haymarket, Mid-City, and then each of those markets is then actually split down into micro markets. So you could have 2 buildings that are right next to each other that have very different values in terms of price points, that attract very different types of people from a demographic perspective. And one building could be predominantly an investment-driven building, and the one next to it an owner-occupier building. So when people are looking to make a move, whether that's for investment or to purchase something to live in, they need to consider some of these factors.
How do you work it out? This is why I wanted to drill down, because normally we would talk about apartments, right, across Australia. So this gives us an opportunity to talk about a micro market. And if you're investing in property, which if you listen to this, you must be doing something or other, but you've got to get down to the brass tacks. You've got to get down to the street level and down to the apartment level. So how do you know whether to invest in apartment block 1 or apartment block 2? They've both got 2-bedroom apartments. They've all got lifts. They've all got pools. They've all got a concierge. How do you work out what's better than the other?
That's an excellent question.
You're not going to tell me.
Look, quite often, the first rule of thumb I'd say to anyone is that provided it's a built product and not something off plan, is if you'd feel comfortable living that property at a certain point in your life, then that's probably a great tick, number one. Number two is if the common areas and the amenities of the building look like they're kept well, that's another tick. The second thing is that it's worthwhile knowing what is the approximate level of owner-occupiers versus tenants. That gives you a bit of a sense as to whether it's a more investment-driven building or an owner-occupied building.
Will an agent know that if you ask them?
A good agent should. Yeah, but not everyone will.
So sorry to interrupt you. Yeah.
No, that's all right. And the other thing I would say is it's important to know a little bit more about the strata and the body corporate. And one of the things I would absolutely encourage any owner who already has a strata property or is thinking about it to become more active on the body corporate. I mean, these are huge assets with significant value, and a lot of people tend to buy and set and forget, hoping that someone else will sort the problems out and run the building and do all the hard work. Well, it's your investment, so I'd love to see more active owners in the body corporates planning for the future of the building and making sure that they have a solid and secure investment for the future.
Oh, look, you've got to get involved, and you can be an armchair sort of complainer and just whinge about, your apartment or wherever it is. But if you're actually involved, you can actually shape change. So I completely agree with you. So a couple of hypotheticals. So when you look at city market, let's talk about Barangaroo. Casino's going up, the big three towers are built, there's little bits and bobs going on at the moment. How many new apartments are going up or are set to go up over, say, the next 5 years? How much stock's going to come on market?
About 1,000.
1,000 to come on market. And right now, in that same sort of suburb postcode, how many?
About 150.
Okay, there's only 150 apartments.
At the moment.
Okay. Yeah. So would you, if you wanted to invest in that market, and I think it's pretty clear that you should, if you could afford it, 3-bed is a really good point of difference, but if it's a 2 or 1, would you be buying new? Would you be buying off the plan?
Look, for a project like Barangaroo, where there's significant media attention on it already, there's a very high cost of development and a very high scrutiny of the final product, I would absolutely say if for someone looking at purchasing off the plan, that's the kind of thing you should be looking at. What I think the future of apartment living looks like is precincts like Barangaroo, where it's not just an apartment block and then maybe a train station, it's the shops, it's the community feeling, it's the amenities for those people. And so provided there is a lifestyle and a strong connection to that environment, I think there's some great projects out there available for people.
Okay, and sort of if you put that same lens towards Zetland or was it Green Square, anyone that's driven to the Sydney airport from Sydney on the right hand side, if you're going to the airport, it's a huge, there's apartments everywhere, right? What's your views of that particular area? You reckon they've done a good job? Do you reckon it's set for the future, or is it a bit of a ghetto?
Yeah, no, for the most part, I think they've done a pretty good job. I mean, that East Village shopping centre, for people that haven't been there, I think is a great product, just the right size and scale for that kind of environment. And in fact, many people that own and live in that in East Village or in Zetland, they love it and they wouldn't move because they're so easy to get to work. It's so easy to get into Surrey Hills, so easy to get to the beach or to the airport. And I think medium to long term, the people that are bought in there will do very well. Like everything in that particular marketplace, there's micro markets within it and some buildings which are more popular than others and some which are driven by investment versus owner-occupier. So one of the things I'd say is just make sure that if you're looking to purchase in one of these developments that you really do your research. One of the metrics that I really love at the moment is dollar per square metre rates. I think we'll see that become more and more of a question which buyers start to ask about. So you think that'll be a
currency? Because you go to other markets in America, for example, that's the currency of how they base it. What is a square foot rate?
Exactly right.
So that currency really isn't as prevalent here in the city markets, which we're talking about. So what will make that shift so you can actually do like for like?
Yeah, well, I think you're right to point out New York because that's probably one of the oldest environments where there's a high density of apartment living. And as Sydney continues to grow in that fashion, or Melbourne and Brisbane, I think we'll start to see the market follow some of those trends. And dollar per square metre rate is a really useful tool to help pinpoint a range of value. It's not the only metric, and in some instances it's actually thrown right out like a lot of metrics within analysing tools for property. But I think overall it can really help people understand where value should sit in certain buildings and certain precincts.
So as a property investor, which I am, but all our listeners are as well, how do you work out, number one, whether or not you should be investing in sort of Sydney CBD or the fringe market versus somewhere else in Australia? And then number two, if you're going to start pinpointing where to invest in Sydney if you're into apartments, how do you start? What's the tools? What's the resources?
Well, obviously, I'm a massive supporter for my marketplace. And I think anyone certainly that's bought into that marketplace over the time that I've been in the market has almost always done exceptionally well. And, I can probably only count maybe on one hand the number of people that haven't, and that's generally because of life circumstance, which has changed, preventing certain things and timing not being quite right. But overall, most people that I would meet who are moving into the city, for instance, are quite often nervous about the shift from moving from a large suburban home into a smaller apartment and having to, shed all of their oodles of stuff that they've probably collected over years. And one of the things I'll often say to them is that I've never actually had anyone move into this market and move out because they didn't like it. And most people tend to actually move in and then either upgrade or move around within a building or within a precinct. How do you get to know the market? I would say you definitely got to hit the ground on Saturdays, and you've got to meet a couple of good agents who are happy to take you by the hand and give you the real laydown of what's actually transpiring in that marketplace. I think there was another question, but I can't remember what it was.
No, it's pretty good, but I want to go to a break, but when we come back, I really want to pin down how you actually assess one of these assets, whether or not it's the right one for you. We're back in a moment. Welcome back to the Smart Property Investment Show. Here with Adrian Wilson, Air Real Estate. We're chatting about the Sydney property market, and I think we've touched on very briefly some of the concerns around the construction quality of apartments, not just in Sydney, but Australia-wide. It's a big focus right now, big media focus. The government's right across it. There's hints that they may change the way in which private certification may happen. Who knows yet? The government's right across it. Realistically, Adrian, how badly built are these apartments? I've seen Opal Tower happen just before Christmas, and I don't know, really haven't had an update recently, but some people are back in there, some people aren't. And then there's that place out at Mascot. What are they calling that? So something, I don't know, Ghost something or other. That's 2 apartment blocks.
Sure.
Is everyone like this? Is it that bad?
Absolutely not. And again, I really feel for people that have been caught in that situation. I certainly wouldn't want to wish that upon anyone. And I'm not a builder either, so I can't really comment on the building or whether they're safe. But certainly, having been in buildings, in and out of apartment buildings for 20 years, it's such a rare instance that you would see this level of action required in order to remediate. And I think I saw somewhere in the press earlier this week that one of those buildings you mentioned is definitely repairable. It's just going to take some time. So it's not a catastrophic event, but obviously it's a very sad situation for the people that have invested their money into these buildings. One of the things I would say about purchasing in apartments is if you are able to purchase an existing dwelling, then you have the benefit of being able to do a strata search. Yeah. And I would absolutely encourage any single person looking at buying an strata scheme to do a strata search.
It's like a couple $100, right? So
correct.
It's money well spent for a peace of mind.
Absolutely.
Gives you plenty of intelligence on it. And
absolutely.
The biggest problem with these remediation works, and most buildings can be remediated, it's just how much does it cost and who foots the bill, right? And then everyone just points their fingers at each other saying it's not for me to pay, it's for someone else to pay, but probably leave that for another time. But let's chat about how you actually secure yourself an apartment in Sydney right now. So you've made a decision to secure an asset as a property investor in the Sydney market. And to your point, people often don't do badly over time if they can hold an asset for a long time. So if you're going to hold an apartment in Sydney over 2 market cycles, you're probably going to do pretty well out of it, right? It's when you need to trade in and out at the wrong time is when you get hurt. Or if you actually buy over market rate because it's an off the plan and markets change, over time that'll sort of fix itself. But putting that aside, say I've got 10 properties on a Saturday morning that I need to go and visit. I've got 15 minutes, 20 minutes for each of them. What do the best investors do? What's their checklist? How do they approach every apartment? Do they rock up to the front door? What's the first thing they should do? And then take us through sort of having a look at one of these properties and how to work out whether it's right for you or compare it against its competition.
Yeah, Phil. So there's probably a couple of things. If you're looking at it from an investor's perspective, and then there's a couple of things that you want to know. There's a high probability that the property could already be rented. So if you're looking at buying a studio or 1 bedroom or maybe a smaller 2 for investment purposes, there's a high chance it might already be rented. So the first thing you want to do is check the quality of the tenant during the inspection, ask the agent if the tenant's been paid on time, and also ask about the vacancy rates. If it's not been tenanted, then obviously you want to make sure that you're asking those questions regardless. What would be the rental return? I'd be asking questions about the strata scheme to find out if there's any planned maintenance, if there's any repairs or special levies required. if perhaps there's an active body corporate and what's their view for the building. If anyone's obviously again looking for investment, they're probably going to be looking either at one of the older mid-city buildings or perhaps something, a 1 or 2 bedroom in one of the newer, more owner-occupied buildings. And both have merits, and it's probably going to come down to budget. But I would say if someone's looking in an owner-occupied building, they will have to expect a lower return because people are paying more to get in there. So what that means is that the yield's going to be much less. Strictly from an investment perspective, a 1-bedroom apartment with parking in a mid-city location in a slightly older block that has a lot of strata history, where you can tell it's obviously well maintained and might be currently rented. You might buy something for maybe between 700,000 and 900,000, and you might get maybe 700, 750 a week for it. That's a pretty sound investment, and that kind of stock, I would say, is probably where investors might want to look.
Okay. And, you've got so many different assets in the market, products in the market, you should be able to compare like for like. Mm-hmm. Does it really matter that much what it's like on the inside, whether or not it's got some fresh paint or whether the kitchen's a bit nicer, it's got marble bench tops versus something with, some other sort of crappy stone or laminate type thing? Does it really matter the fixtures and fittings or the layout of these assets versus just dealing with it all on paper and just looking at how they stack up, sort of comparable properties and this sort of stuff?
Well, I think if it doesn't have all of those ling features, then there's probably an opportunity for you to add value at some point. So I like that.
Okay.
But in terms of attracting tenants, a lot of tenants who are in the city market are there because they want to be close to work or because they're transitioning from lifestyle. And so with that, a lot of the tenants want to find something that is as new and as fresh and as sexy as possible. So when thinking about attracting tenants, that will definitely make a big difference.
Interesting. I didn't really think of it that way, but I like the whole idea of adding value to it through renovation. Is it easy to renovate in these sort of big, large blocks? Is it, they make it difficult for you?
They don't make it difficult, but you do have to follow the rules. Yeah. And you obviously need to apply for the appropriate strata approvals before doing any renovation. But absolutely, I've seen quite a number of our clients purchase properties in great buildings that might be a little bit older, do a really good renovation and either lease that out and increase their yield significantly or on-sell it straight away.
What's the overall sentiment of the market right now in terms of discounting? If you're going in and negotiate, whether you're buying at auction or private treaty. On that note, is it better to buy this stuff at auction or is it better to buy private treaty? It doesn't really matter.
I don't think it really matters. I think the nice thing about buying at auction is that you get to see the transparency of the crowd. So you get to see who else you're bidding against and what other investors might think a property's worth. Having said that, a lot of the stock in Sydney City and surrounds tends to be listed by private treaty. The reason for that, if you think about the dollar per square metre rate, is you said you've got like-minded or similar apartments that can be right next to each other, or there might be an apartment quite similar in a block next door which is sold. So generally, from a commercial perspective, it's easier
It's a lot more commoditised.
Correct. It's easier to ascertain value.
So how do you get a feel when you're negotiating with an agent in private treaty whether or not there's much room to get a cheaper rate? What sort of questions should be asking to actually understand the intent of the owner and whether or not there's a bargain there? Or can you get bargains in apartments in Sydney right now?
Look, I'm sure that if you're a savvy investor, that there are opportunities in any market for you. I think that takes a lot of research to get to that point. Yeah. I think you've got to be willing to put the hard yards in before having that conversation with your agent so that you're completely up to spec with what's happening in that market and even in that micro market. Certainly for us, our agent seeks to price things fairly within the market, and we find that there's a lot of information now to investors and purchasers available. So, for us, if it's investment-driven stock, it's typically listed for sale with a price. If it's owner-occupied stock, which is rare and something hasn't come up for a while in that particular block or that particular aspect, then we're more likely to auction it and see where the market premium is.
And, we talk a lot about this on the Smart Property Investment Show and also smartpropertyinvestment.com.au, is that as a property investor, often the best deals you get, the best assets you get, in inverted commas, is off-market listing. So before it hits realestate.com, for example, is this just an urban myth, or do agents actually have a little Rolodex of investors they know that if they get a property, they can give them a call and sort of sell it on immediately? Like, for example, I want to buy to you a 2-bedroom apartment in a city, but I want it at a distressed sale. If you get one, call me straight away. Does this happen?
Look, it does. The number of distressed sales that happen in Sydney City is almost next to none.
Yeah.
But we definitely have buyers who have a set criteria or want to be in a specific building. I've got one buyer at the moment who wants to be between 3 floors with a certain aspect in a certain building. There's 15 apartments that match that. And so one of my roles is to then try and help them find that. So, we would definitely transact a lot of properties off market. The hard thing for investors and for buyers with that is to work out the difference between the vendors who are simply fishing for a price which is maybe not unachievable to those which is an opportunity presented that matches all the right things and is the right value. And that's quite a difficult thing to understand unless you're out in the marketplace actively looking and understanding what's happening.
How are you generating most of your listings? Is it people looking to sell, or you're doing what good agents do and you're burning the shoe leather and knocking on doors and finding these vendors who might want to shift their properties?
Look, a bit of both, Phil. And at the moment, with a new brand, we're really keen to try and differentiate our own services in the apartment space. I'll give you an example. We've had a case study last week of a property that we sold in Pyrmont. Last week it was the national price record at auction, 5.57. That property had been on the market off and on with the vendor as a for sale by owner for over 6 years. We came in with a strategy around presentation, around furniture styling, around the right marketing mediums to attract the right buyers. And we had over 160 inquiries. We had 92 inspections. We had issued 14 contracts on that property, and we had 4 bidders at auction. It sold over reserve for a suburb record and a building record. And I think from my perspective, if you do the right thing by clients, if you make the right recommendation, if you have a method and a strategy around your approach to market, particularly in the apartment space, then everyone wins.
So after that sale, did you get other people that vendors in the market calling you up saying, I'm thinking about listing my property? Is that how it works?
The problem is when you set a record, then no one else in the building wants to move. So
yeah, it gets on. But just so on a tactic, I guess, for property investors, you mentioned that, deciding on the sale of the property, 5.57 million, it's an expensive property, right? You've obviously staged it for the market you were trying to attract. In terms of leasing or renting out the sort of, let's call them cookie cutter, inverted commas, properties in the Sydney market, 2-bedders or 3-bedders or whatever, should you stage it in order to try and attract a tenant, or you just leave it empty and let people work it out themselves?
I'm a massive believer in presentation, and I think having furniture in the property can make an incredible difference, both to sale and for lease. In fact, we recommended to a client of ours who actually didn't end up giving us the instruction on the rental property. They were already committed with another agent, but they were asking us for advice, and we said, look, you should definitely furnish this place, because for the small, it was around $1,500 or whatever a week. It had been vacant for several weeks. And we said the amount that you'd spend on the furniture to stage it, you probably find a tenant quite quickly. So they did that. I don't know what it cost them, maybe $1,500 or $2,000, maybe a week's rent, but they leased it in a week.
Yeah.
And so on the higher end properties, I think that's definitely something that will become more and more common as that market becomes more sophisticated, because tenants who are looking for properties at $1,500 or $2,000 or $3,000 a week want to feel good when they walk into a property. It's not as though they're just happy to take the first thing they come across. The second thing, or the advantage of actually furnishing a property, if you furnish it long term, is that you've got tax depreciation on that. You can also claim the purchase price. And I think in some instances, or most instances, you may even increase your yield significantly.
Okay. It's good feedback. Closing remarks, we've sort of spoken positively about the Sydney apartment market. Let's chat about some negatives before we close off. Is there any reason why you shouldn't be investing in Sydney, the apartment market?
Look, I am a little biased. I think you've got to do your homework and you've got to buy the right investment for yourself. There's definitely a pipeline of projects that are still under construction or in planning phase. If you look at the market generally, we've got very little stock for high-end purchases for people who are downsizing. We've got, an increasing population. We've got lifestyle people that want to be close to amenity, want to be in these markets. And, I just think the medium to long-term view of this marketplace in Sydney City and surrounds is super strong. And if you look at any of the key CBD-based environments from Singapore to Hong Kong to New York to London, wherever it may be, it's those environments which are most sought after. And I think that trend will continue.
It's a good conclusion. It comes back to, the responsibility is for the property investor to make sure they're buying the best and the most appropriate investment for them. So there's no shortage of information around the Sydney property market. You can check it out. There's plenty we write about all the time. smartpropertyinvestment.com.au. Go and check it out. I'm sure Adrian give you plenty of information as well. You can give him a call, Air Real Estate, pick his brain, because if you want to get into this market, you need to know what's going on. And a good agent will share all the information that they have. So I'm sure Adrian's one of those guys. So thanks for coming in, mate. I really enjoyed it.
Thank you,
Best
Phil.
of luck with the new business.
Cheers.
I hope it goes well. And I'll pick your brain around what's going on in apartments. Is there, what are the benchmark headlines I need to be looking at if I'm working out whether or not it's time to get into the Sydney apartment market? What 2 or 3 things that I know it's time for me?
For you, well, I would say right now, definitely we've seen the market cool and stabilise. The interesting thing about the city market in particular is that it's actually usually at the beginning or the end of each property cycle that it becomes most sought after. And what I mean by that is that it's either driven by up-and-coming executives and investors who are wanting to buy a city investment to maybe live in for a while and then rent out for the long term, or it's at the other end, the downsizers and empty nesters. So what tends to happen is the market actually is often influenced by the cycle of the end of the suburban markets. And so because of that, times like in winter or over Christmas, we actually tend to be busier. So spring is not our busiest month because people are actually selling at that time. Okay. And then they come into the market after that. So we're almost counter-cyclical, and we tend to have a fairly consistent market throughout the year. The other thing I would say is that rates are low at the moment. Stock levels are quite low. And if you're in the market to buy in the city, I would say now is a phenomenal time to be doing that.
Yeah, it's good information. Best of luck with that. If you're looking at the city market, remember to check out smartpropertyinvestment.com.au. We'll put a greater focus on this as well, and we'll also touch on some of the other key capital areas where there is quite a significant apartment market, in particular Melbourne and also Brisbane, which is has its changing fortunes as well. So go and check it out, smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's going on in property investment right across the nation, smartpropertyinvestment.com.au/subscribe. Adrian, thanks again, mate. Really appreciate you coming in. If you're into social media, go and check out Smart Property HQ if that's how you like to get your information. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.